Hello to everyone. Today we are going to discuss about the basic terms or terminology used in accounting. First one is bookkeeping. Bookkeeping, it is a primary stage. It involves following step: identification, measuring and recording. So bookkeeping, it is just a primary stage where we identify the transactions, measuring the transactions and do record in a same manner. Next one is proprietor. Proprietor is the owner of business. Next one is transaction. Transaction means that is related to the business, that is in the form of monetary, which can expressed in the form of money. Asset is what? It is a property which increase the earning capacity of business. And next one is expense and expenditure. Both have different meaning. Expense means day-to-day nature and recurring nature, and expense means less amount. Expenditure is sometime it's not occurring day to day, it's a non-recurring nature, like huge amount. It's called expenditure. So another one is stock. Stock can be opening or it can be closing stock. So there is a difference between the inventory or stock. Stock can be your inventory, but inventory cannot become your stock. Stock means which is required daily purpose. Stock includes finished, and inventory which can be raw materials, work in progress, or the finished also, which may required in quarterly. So next one is difference between the profit and gain. Profit, when we earn the profit every year. Profit you can calculate from the sales minus expenses, and gains when we rise in, not in every year but sometimes, profit of irregular nature, that is called gain. Means gain of sales of fixed assets, because we are not selling fixed asset again and again, so we sometimes there is a chance to gain on the sales of fixed assets. So this is type of profit but in irregular nature. The next one is trade receivable. Trade means debtors and receivables means BR. Debtors means to whom the business provide goods on credit. Suppose I am a businessman, I have a business and I am giving you the goods on the credit. So this there is no paperwork, and because we have the trust between, there has a trust between the two parties, so there is no paperwork here. In bills receivables also, just like the debtors to whom the business provides goods on credit, but here the paperwork is involved. Debtor signs are involved here, date of payment and paying amount, return, everything is fixed here, because sometimes there is no trust between the parties. So bills receivable is just fully paperwork process. Another one, that is trade payable. Trade means, yeah, here the creditors, payable means bills payables. Credits means from whom the business takes goods from the credit, and payables, bills payables, they are also the creditor, plus paperwork is also involved here. Next one is sale turn, which is called return inward, and purchase return, which is called return outward also. And another one is users. So both internal users and external user are in the accounting. So internal user who have interest to know the position of the companies, like management, manager, owners, employee. And external means user having the direct interest, like investor, banks, creditors, suppliers, lenders, or government. And it involves other indirect users which involve indirect interests, like stock exchange, trade owners, underwriters, public press. So external includes the government, investors, suppliers, bank, creditor. These all are they are all the external users of the accounting. So contingent liability is what? That's it's depend upon the future. And voucher is a written evidence which support the business transactions. Accounting is a process and accountancy is a subject. What is the difference between the single entry system and double entry system? Single entry system, only cash transactions related to debtors and creditors are recorded. In double entry system, that's called dual aspect also. It includes all the transactions, like accrual basis, like credit plus cash also. That's all for the today. Thank you.